Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast, where every day I spin my virtual tech wheel of hope, wait for it to stop on an industry, and then explore how technology is transforming it, or at least something like that. And today I want to explore the world of insurance, or more specifically, InsurTech. And integrated specialty coverages, ISC, to you and me, they combine the best-in-class insurance data, analytics and technology. But if we strip out all of those buzzwords, there is a great human story of a man who has been involved in the insurance industry since birth, as his father has been a broker and an insurance executive for his entire life. But now he is helping that entire industry evolve by leveraging technology. So I invited Matt Roselle onto the podcast today to talk about his experiences and his story in growing an InsurTech business, sharing his unique focus on loss ratio, not to mention the reinvention of traditional MGA sales models, and the tech aspects too, such as using artificial intelligence and alternative data to create superior insurance policies that are more fit for a digital age. And we're going to talk about all that and much more. So buckle up and hold on tight so I can beam your ears all the way to California so we can speak with Matt from ISC, who's waiting to speak with us now. So a massive warm welcome to the show, Matt. Can you tell the listeners a little about who you are and what you do?
Great. Happy to do it. And thanks for having me, Neil. Matt Roselle. I'm the Chief Operating Officer of ISC, which is Integrated Specialty Coverages. ISC is a full-service, multi-line program administrator that focuses on the commercial space across a few different industry segments, one being contractors, another trucking. We have a hospitality group as well as a property division.
And one of the things I always try and do with guests on this Daily Tech podcast is try and find out a little bit more about their own personal story and where their passions came from. So I've got to ask, can you remember where your passion for both insurance and technology came from? And do you remember that point where those two worlds collided?
Interestingly enough, Neil, I grew up in the industry. My dad's been a broker for north of 50 years. He'd probably be upset if I put the number on it. But that exposure, obviously young, got me very intrigued by the industry. And ultimately, as I was finishing schooling, I, started in the distribution world in brokerage myself. And early on, identified that, and again, this was in the span of the late, 90s, early 2000s, where, modern technology had not been totally adopted. There were a lot of sort of, DOS-based internal platforms that carriers operated from. And I just kind of thought there was a better way. So early on, I made, internet leads a very big part of the agency that I was growing. And in those days, there were very few vendors out there, but that became a very large part of what we did. In addition, was sort of an early adopter of utilizing internet recruiting to attract, both new reps or brokers to our firm, and also use that for developing staffing. So, those sort of intersected with me and have really remained at the core and have helped, sort of guide a lot of how I think about the business, today and prospectively.
And you did help build SIS as a tech-enabled multi-line general agency that ultimately sold to ISC. But I've got to ask, what were the biggest lessons that you learned along your way growing an InsurTech business?
I was fortunate that when I first arrived at SIS, the original founders of the firm had developed a proprietary online platform. And in that span of time, we also brought a gentleman in who'd come from Sony named Eric Holcomb, who's our Chief Technology Officer today. And Eric was in the throes of, sort of expanding and updating the platform from which we operated. So, getting very immersed, obviously, in how that technology was deployed and how that would interact with our brokerage audience. And then ultimately, using that as sort of the main focal point of our business. I mean, we really are structured and operate is a technology firm that, happens to distribute insurance products. So, as we've constructed various programs across, particularly at the time, the construction segment, we really are mindful of how that user interface and user experience best interacts with brokers to make their lives as seamless and easy as possible, while also leveraging the tech, internally for our underwriting teams. And, we have, I would say, every facet of our organization is tech enabled in that we're, able to create a lot of operational efficiency to be highly transactional and be very, cost effective in our approach as well. So, through those learnings and obviously the early stages of launching what's our current platform, really understanding how best to interact and engage with our technology group. Again, they're software developers. They don't, have sort of the insurance speak down. So ultimately, understanding how best to relate business requirements and instructions to them, that helps them to build obviously more effectively and more rapidly. And that's been a significant learning curve for a lot of us in the insurance side over the last, 5-6 years, but certainly has come to fruition pretty well.
Love that. And on the subject of integrated speciality coverages, how are you leveraging insurance data, analytics and technology, etc.? Can you expand on that too?
Yeah, absolutely. I would say that is a major focal point of our CEO, Matt Grossberg's. We ultimately had an immense amount of data capture from having an online platform prior to the acquisition by ISC. But with ISC, we have, built out an entire data science group. And in that, we are reviewing all of our data, down to having created a proprietary producer scoring model using both public data sets and internal data sets. We also, have studied our data, correlating loss to a variety of not only sort of traditional insurance-related underwriting questions in metrics, but also are utilizing a lot of third-party sources, a lot of publicly available data sets to, again, just take a different look and perspective on risk. And in that, we have a full data science team led by our CIO, Brad Feld. And, that particular group is just living in the data and they're looking for correlations, whether it's between classes and states and our pricing. And in that as well, we've deployed an AI bot that we, are in the early days of, better equipping for overall total machine learning, utilizing some of the predictive analytics that we've been able to uncover from the, millions of data points we've collected over the years.
And presumably, without that machine learning, etc., it's just too time consuming, or it has been too time consuming over the years to get those kind of insights out. But machine learning has helped quicken that process, right?
Absolutely. And in just really the real-time visibility and access to the data to make more informed underwriting level decisions. And even in studying underwriters' sort of predispositions for approvals, we've been able to, massively increase our throughput is sort of a no-touch, which ultimately, not just saves from an operational efficiency perspective, but also just from a broker's perspective and sort of an adoption. Obviously, the more seamlessly we can, deliver the insurance products to the brokerage audience, the more effectively they can sell to their clients and ultimately build their own agencies. So, we try to take that vantage point of, how best can we deliver the technology, but not by any means sacrificing loss ratios. And I would say that sort of insight into the data that we've been able to achieve through our data warehousing and other, tools that we've utilized internally, we have a a very unique perspective on the data, and that real-time access allows us to be very responsive to price, where traditionally, firms may review their rating structure on an annual basis or sometimes even multiple year basis. And we're looking at all of the data in real time and equipping our AI bot to, have real-time decisioning and pricing capabilities. And that's something that's well ahead of the curve in the industry.
Looking at you guys from the outside looking in, one of the things that also stands out is your focus on technology and that unique focus on loss ratio. Is that something you can expand on too?
Yeah, absolutely. I mean, certainly, again, with first understanding where we have our data, where we need to house the data, and then obviously how we best need to view that data, we're all sort of the early steps. And then obviously also integrating the, trucking business that we have along with hospitality and property. We have immense amounts of data. We first sort of took the perspective of looking at our contractors portfolio because it's sort of within a micro business segment. And obviously, having been automated for the longest time, we've been able to, study, again, the millions of pieces of data that we've captured over the years. And in that, we've done studies, correlating loss to unique data sets or outside kind of, third-party providers and public data that, again, gives us, sort of a interesting perspective of potential outcomes and sort of how loss best correlates to, states, classes, our individual brokers, even our own individual underwriting team members, so that, again, we're able to, sort of flex our pricing and have that, sort of real-time capability prospectively to be able to, spectrum underwrite where we believe, every risk has its own price, and ultimately, being able to deliver that using not only historical information, but also predictive analytics, that can incorporate a variety of different, third-party data sets.
And if we do have anyone listening from the world of insurance or InsurTech, can I also ask that you tell me a little bit more about how you're leveraging technology to reinvent that traditional MGA sales model? Because you're doing some great work there too, aren't you?
Oh, well, thank you. And, certainly we have a unique perspective as a program administrator / MGA, where we're really sitting kind of in the middle of the channel. And in that, obviously, we're able to partner with our brokers, and obviously through the submission and underwriting process, we're capturing a significant amount of data. And ultimately as well, in how we relay that data to our risk-taking partners who are carriers and reinsurers, that also is important from the perspective of, they are not getting sort of a lagging indication of how the book's performing, where they have visibility into our platform on a real-time basis. And we even allow our reinsurer sort of an audit role and a visibility to, every account as it could come in real time if they wanted to view it in that fashion. So, in that, we've tried to, contemplate who are the various stakeholders within kind of the insurance value chain, if you will, and then obviously engineer technologies that help us to most effectively deliver the products that we make available on our platform to the brokerage distribution audience, while then also, understanding how our risk-taking partners need to get the information most effectively and most rapidly for them to manage and monitor the book of business that they've undertaken on our behalf.
And again, just to help bring to life some of the things that we're talking about today, can you also tell me a little bit more about how you're using AI and alternative data to create almost superior insurance policies fit for a digital age? Because I love how you're almost combining the best of both worlds here.
One interesting perspective that even, predates ISC is that we were very responsive to claims and how a policy needed to be constructed and have, wordings that perhaps, addressed the exposures that were most relevant to a particular class or trade. And obviously customize kind of an insurance program around, various characteristics of risk across a variety of classes in the small contractor space. Now, obviously, as we've been able to garner more data and obviously leverage the technology we've put into place, that has not just helped us in crafting, sort of manuscripted coverage forms in many examples, but also too, really, a broader array of pricing options so that ultimately, the data can drive sort of the underwriting decisioning and the most appropriate price based on obviously not only historical information, but what we perceive to be future indications of loss. And, we've utilized AI actually since June of 2017, and we've deployed our bot. And obviously in early days, his ability to be equipped by sort of human intervention and sort of rules-based logic, formulated that basis. And as we've evolved the technology over time, that bot has obviously gotten more powerful, and his approval rates, especially in our micro business segment, are north of 50% presently in our portfolio. In that, we've actually just recently been studying sort of the bot's underwriting and loss ratio performance versus that of our human underwriting team. And by no means to disparage the human underwriting team, but actually our bot is running at about half the loss ratio of the human underwriters. Now, part of that obviously comes to, his capability of, basically maintaining a certain stance or position without relaxing sort of underwriting based on feel and human, intervention. But also too, the bot is underwriting sort of the lighter in class exposures. So we would have, I guess a tendency to believe that his loss ratio should outperform that of the human underwriters. But obviously, the more effectively we can equip the bot with data points, third-party data, and obviously ultimate loss experience, that will only make that a more powerful engine for our overall operation, but truly also unlock the human underwriters' potential so that they're really looking at and focusing their attention on accounts that need a significant amount of additional, focus in sort of underwriting acumen, whereas the low touch, highly transactional sort of micro business segment certainly can be handled through a bot. We've also just recently created sort of a gig economy product that, again, is designed to focus sort of on a micro duration, project specific type basis. And, that has allowed us, or we forecast that it's going to allow us to obviously put the right product in the right person's hands and sort of remove some of the drag that can come from, a just normal insurance transaction when a policy may be sold that isn't the perfect fit for the insured, which obviously can lead to cancellations and other, churn within the book. So we feel that, some of this micro duration or gig economy, business will ultimately allow us, a greater array of flexibility so that, again, the right products being matched to the right consumer by our broker audience.
It just feels like you were a long way ahead of your time, really, using AI and leveraging AI back in 2017. But as we begin to look towards 2021, which feels odd just even saying that out loud, but are there any trends that you're noticing in InsurTech that you'll think will continue to affect the industry next year?
That's a great question. And certainly there are a lot of additional entrants into the space. Now, obviously, a great majority of those are focused on delivering, personal lines oriented solutions where obviously there's a significantly broader audience with an immense amount of additional data that may not be readily available in the commercial line space. I would say that, our perspective is that there will be more entrants in that sort of especially smaller commercial segment. And obviously we feel very well positioned and poised to be able to continue to grow, given the fact that we were very early adopters of having a platform, being able to capture and utilize our data most effectively. And obviously, as you touched upon, having employed an AI bot that is evolving from more rules-based logic into a true AI ML type model. And we feel that, other InsurTechs who are out there will certainly be utilizing very similar methodologies. However, they may not have the loss experience behind them to truly draw the same types of data correlations that we're capable of doing, having millions upon millions of data points to be able to extract that information. But I would say just broadly, we see that there's going to be more entrants who are obviously not just looking to create technologies to deliver ultimately to the end consumer, as are seen through some of the InsurTechs that are, again, personal lines focused. But again, taking the position of how they can make brokers' lives much easier and more efficient through, a variety of different technologies. And that's, where a lot of our emphasis has been focused on the last, really 6+ years, is how we can better deliver the right products to the brokerage distribution audience so they can in turn have a better experience for their own clients.
And as for you guys, where do you go from here, and what's next for you? I appreciate there's probably not too much you can share, but is there anything you can leave us with today?
Certainly. Obviously, we're going to continue to work within our data and obviously identifying additional data sets that we can obviously draw correlations to and continue to expand our footprint more profitably. In addition, we have several different product initiatives that are being led by Shad McKnight, our Chief Underwriting Officer, to continue evolving our portfolio, again, sort of upmarket and utilizing similar blocking and tackling from a technology perspective as what we've been able to deploy in sort of the micro segment. In addition, we're very acquisitive. We've got several different M&A opportunities that we're looking at really at any given point in time. And I would say our objective is to really have a very broad basket of, 10 to 15 different industry segments that we have programs and are capable of administering with the best-in-class underwriting acumen along with best-in-class technology. We feel that, having 10 to 15 different segments and expanding that from potentially the 4 that we have today will obviously allow us, sort of a hedge against cyclicality within various portfolios so that there's no particular pressure at any given point in time to, focus only on growth within a certain segment, but being, significantly more diversified, we're able to hedge that and ultimately, be focused very acutely on the profitability that we're delivering by program, product, and industry segment to our risk-taking partners. And, that will certainly continue not just in 2021, but beyond. So I would say our major emphasis is, technology development, technology delivery, data science, predictive modeling, and then obviously, using that to continue a thoughtful approach to product development while also targeting best in class, underwriting teams and other, smaller, perhaps wholesalers or MGAs that could potentially partner with ISC. If they've been looking for a shot in the arm, especially from a technology and delivery perspective, I think we bring a unique value proposition to, future potential acquisition targets or partners.
I've loved chatting with you today. Before I do let you go, if anyone listening would like to carry on this conversation that we started today and dive a little bit deeper into the subject, what's the best way of finding you guys online and equally contacting your team if anyone's got any questions?
Thanks a lot again, Neil. I really have appreciated the opportunity to speak with you and extremely great questions and very relevant to the current times. To reach us, ISC is at iscmga.com. Certainly can learn more about our programs and our leadership team. And then, if anyone would like to reach out to me directly, I'm Matt Roselle. That's MROSELLE at iscmga.com. Would certainly love to carry on the conversation with any listener who's certainly interested in, discussing technology, innovation, or sort of the insurance mosaic as it stands.
Well, like I said a few moments ago, I love chatting with you today. So much about your story I love there, especially how you've been pretty much involved in the insurance industry since your birth, as your father had been a broker and insurance executive for his entire life, but how you've evolved with that and leveraged the latest technology to make a real difference and create these superior policies. Quite inspirational. So thank you so much for sharing that beautiful story with us all today. Thank you.
Thank you, Neil.
What a great story. From being involved in the industry his entire life, building SIS as a tech-enabled multi-general agency that ultimately sold to ISC, from sharing lessons that he learned along the way, growing an InsurTech business and leveraging AI to alternative data and creating superior insurance policies, and of course exploring the latest trends ahead in the world of InsurTech. And I suspect if we've got anyone listening from the world of insurance, you've got your own insights and expertise, and maybe you want to throw your hat into the ring too. And if that is the case, I'm the easiest guy in the world to find. Email me now, techblogwriter@outlook.com, tweet me at Neil C. Hughes, or pop by my website, techblogwriter.co.uk, where you'll find over 1,400 interviews. There's also links to podcasts that I do with Citrix and Netgear, and also how you can work with me, whether it be outsourcing your business blogs, tech blogs, thought leadership material, or even work with me so I can help you launch your podcast too. Whatever it is, we've got all bases covered. So keep those messages coming in, and I'll return again tomorrow, same time. So thank you for listening, and until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.